Is it time to cash out from the stock market? When you walk into a casino, you aren't going to stay there forever. Presumably, your intention would be to game the system, make it big, and then cash out. Well, the stock market is kind of a more formal casino, one which is played for the long term. And so, at what point should one quit the stock market? In this video, we discuss if it's time to cash out from the stock market. So, like the regular world, the financial world has its unique structures. These could be banks, exchanges, and other financial institutions, which facilitate everyday trade. But then, what exactly is traded? What exactly is exchanged? Well, to complement its unique structures, the financial world also has its unique building blocks. These unique building blocks are referred to as financial assets. So then, what exactly are those? Well, financial assets are liquid assets that get their value from a contractual right or ownership claim. Examples include stocks, bonds, options, and bank deposits. So you see, from this buildup, we can tell that the stock market is the space within which these financial assets are traded. The thing about these financial assets is that they have no intrinsic, fixed value, but instead have a value that fluctuates depending on a variety of factors. Supply and demand within the financial market are some of the determinants of value for these assets. However, there are others as well. So when you consider a tangible asset like gold, it's pretty easy to determine where gold comes from. It is a natural mineral that exists beneath the Earth's surface. As such, for more gold to enter the market, it first has to be mined. But are stocks also mined the same way? Well, not exactly. There are certain financial assets that are mined in similar ways as gold. Bitcoin and certain other cryptocurrencies come to mind. With Bitcoin, one has to use certain computational processes to mine blocks of the asset from out of the fabric of cyberspace. However, the process is different for stocks. And so, where do stocks come from? So, say you have a startup and you manage to secure funding to make your dream company a reality. Well, now, you should be in control of a pretty successful private company. But companies, like living things, must grow, and if you're fortunate enough, your company will grow at a steady pace. But the thing about company growth is that there is a maximum size a company can be before it has to go public. In going public, a company splits up into unique ownership shares that are traded on the stock market. These are also known as stocks, and so this is the great source that stocks come from. You can think of them as the casino chips of the financial world. So, stocks have certain properties which should be of unique interest to all stock market traders. For one, they have fluctuating values. Their value may increase or decrease depending on the performance of the associated company or the state of the market. So, handling stocks can be like walking a tightrope at times. At this point, you should have observed that we've been using this casino analogy to explain the stock market. However, there is a point at which this casino analogy breaks down. Playing the stock market can be akin to gambling, sure. However, there are more complexities than that. For one, the stock market is a game that is played for the long term. It has literally created multi-billionaires. If you ever made that much money in a casino, you might put them out of business permanently. The stock market provides high earnings potential as well as immense longevity. Again, the stock market is assets that fluctuate in value. And so, if you become a millionaire today, it might be the same tomorrow. Your worth is largely liquid in value. In addition, you might not be able to control these liquid funds as easily as cash money or other non-liquid assets. The stock market has the ability to create fortunes, but then it also has the ability to destroy fortunes. People who do not know what they are doing have lost so much money, to the point of putting themselves inside an abyss of debt. The stock market has no brakes, and it has few limitations. There's a lot of freedom and potential to earn, but there's also a lot of potential to lose. And so, at what time should someone cash out of the stock market? Well, there isn't any one size that fits all answers. The thing is, if you really want to cash out, then you need to make sure your personal finances are pretty much in order. Emphasis on the word personal. Each person has a unique amount of money, which is enough for them. Each person has a unique amount of money that can take care of all present and future expenses. And so, Based on your financial goals, if you feel you have earned enough and you no longer have the financial freedom or the time to play the market, then you might want to consider pulling out. Another strategy is that you don't have to trade actively. If your portfolio is of enough quality, you could actually earn money just by holding onto your stocks. This is a form of passive income that arrives in the form of dividends. It's also worth remembering that even if you cash out, you can return to the stock market at any time. Of course, the stock market can end up not opening following some massive catastrophe. But given that there's a pretty low chance that happens, it's not an eventuality you need to worry about at the moment. There are also other markets you can consider. There is the real estate market, as well as the cryptocurrency market. And so, if you're having some trouble winning in the stock market, then you might want to do some research into these other markets before diving in. Coming to the end of this video, we hope you've learned much about cashing out from the stock market. There's no global right time to cash out, and whatever decisions you make should be informed by the state of your finances and your financial goals. Well, that's all for today. We hope you enjoyed the video. To learn more, check out other videos on this channel. Until next time, have a great day. Catch you later.